Guys, this could be the most important video that I have made this year. And the reason is because the stock market could be on the verge of a major collapse, which could lead us into the cycle lows of this bear market. Now, I've been talking about a final capitulation event, and it seems like we could be getting really close to finally seeing that come to fruition. And then we're going to take a quick look at what that means for cryptocurrency as well. Okay, before we get into it, guys, if you like our videos, please leave a like, comment, or subscribe to our channel, or share it with your friends to help us build the channel, and we can make more videos going forward. Okay, let's get stuck into it. Basically, what we're seeing here is a failure to hold the support of the daily 200 moving average, right? We have had a close under that open, then after a big gap up on the daily open, and we're selling off throughout the rest of today. Now, the most important thing to know right now, guys, is that we have non-farm payrolls coming out tonight, which are expected to be hotter than expected. Doesn't really make sense, but if you understand how it works, it sort of does. But basically, we're looking at non-farm payrolls coming in higher. And if that happens, we're going to probably see a lot more selling pressure, because that means the economy is still running too hot. And there's still being too many jobs created in the economy, right? Which means the Fed is going to be under more pressure at FOMC to raise that 50 basis points instead of just the 2.5, so the 25. And that will lead to extra selling pressure in the stock market, which could break us down through this key support level, which we're sitting on at the moment, which is the downtrend, which was resistance, now flipped into support. So basically what we're looking at here, if you're going to be a chart pattern, trader, is the broadening descending wedge, and that should basically break to the upside, which we've done so far, and then you get a bullish retest on this downtrend through here, and then it sends us up pretty much to all-time highs, right, as the target. Now, there's potential for this major pattern to end up failing, and when you have a bullish pattern like this and it fails, it usually leads to proving that the market is quite bearish, and usually leads to a large sell-off, right? But we're not basing our theory on that. Basically, the way we're looking at this is a major channel, right? It should hold as support after breaking out, right? If we do break under this level, there's going to be a lot of people that bought in through here. They're going to be trapped underwater. Basically, I was looking at some data the other day, and it was showing the retail buyers in the stock market, right? And the amount of stocks that they were buying. And it pretty much tracked the market like this very closely, except for this last rally up. It just went through the roof like this. And what that told me, I've covered it in the last few videos as well, is that there were institutions unloading into this distribution range through here, while retail was buying like absolute crazy. And we saw that, all over the internet. Everyone was talking about going back to all-time highs and the bear market being over, and the bottom being in for crypto. And we saw massive amounts of greed. Everyone was buying like crazy, but it was a small amounts buying like crazy, where the smart money was distributing and selling into them. We've been proven that it was obviously correct now, with the breakdown here after the hot CPI came in on the 14th of Feb, right? So we've got another CPI coming out on Tuesday, the 14th of March, which is in only 2 trading days time from today, right? So if that ends up coming out hotter than expected, like we did in February, then I very much doubt that this is going to be able to hold, and it could lead us to trapping all these traders above the breakout, them realizing that they've just bought a bull trap and having to puke as we roll lower. And then the target for that is going to be between this level here, 3,400 and 3,250, which is the previous COVID all-time high before the COVID nuke, right? So those are the major levels I'm watching. Also, if we are a little bit more bullish, we could end up, holding up at this range low level down here. And then that would probably set us up to look a lot more bullish into the future, right? If we get some sort of a bottom in through here, and then we're making, a major swing point at a higher low, right? And then we can talk about breaking out of here later on as CPI data starts to come in and proving that we're actually coming down towards that sort of 4 and 3 area. But I don't think that's going to happen for the next few prints until the back end of Q2. I think is probably more likely that we can start to see them come down, and that is because in Q2 last year, that's when we got those really high prints of like 8 and 9% and stuff like that, and then it started to come down in June, right? So we're comparing into last year's data that was really, really high, so it's easier to get those lower readings. It was only in the mid 7s in February, which is why I think this February data, which gets released on the 14th of March, is going to actually be higher again as well. And then that sees us have that final capitulation. Now, look, I could be wrong, and non-farm payroll comes in tonight really weak, and then we get a little bit of a bounce here. And then on Tuesday, CPI comes in weaker than expected as well. And okay, the Fed's probably beating inflation, and we just start to launch back up here. Now, what we'll watch for if that happens is a break of this downtrend through here, right? And if we get a break of that downtrend through there, then this is going to end up being some sort of a falling wedge type pattern. It will look for a rally back to retest this 4,300 level, right? I think that is much less likely. And I think what's more likely to happen is we end up pulling back and continue this pullback lower into the end of March, start of April. And maybe if we're lucky, it will hold the bottom of this range around 3,600, and that could put the bottom on. If not, we're looking at banks going under at the moment, with obviously Silvergate going under the other day, but then also SVB facing some major struggles overnight and looking like they're possibly going to go under. Bill Akerman coming out and saying that they need to be bailed out. When was the last time we saw, we saw big hedge fund managers calling for bailouts of banks? That's right, 2008. And what was happening back in 2008? The 2008 financial crisis, and we were having the same price action, guys. We broke out of our downtrend resistance level, that falling, broadening, descending wedge type play. And what happened? It failed to continue to push to the upside. The pattern failed, and then we broke down into the final capitulation moment, right? Same thing happened in 2000 as well. Broke out of the broadening, descending wedge. It fails to rally from there, and we roll over into the final capitulation. So, everything for me right now is sort of starting to line up. We're starting to get a lot of fear kicking in. The banking sector is starting to feel a lot of pressure, with, a couple of smaller banks going under, feeling the heat a little bit. Massive sell-off in the banking sector last night, between 5 to 7% across all the majors. So, we're starting to push into those areas where we could start to see a major fear and panic capitulation into the cycle lows. That's why I've got this green box down here, looking for that to get hit. So what does that mean for cryptocurrency? At the moment, obviously, we had the big sell-off overnight, have been talking about these 2 weeklies being very bearish and rejecting from range highs, and also the rejection from the 200 weekly moving average, which is pretty much the very top of this cycle. Now we've pulled back, hanging around the 50 area and a fill of the CME gap. We've obviously broken below major support level here, which was a bullish order block, right? Or also could be seen as a breaker block, right? And at the moment, obviously, we've still got 2.5 days until the weekly close. Close above that could be bullish. Closing below that, very bearish, right? This is a major leg down, similar to back here, and obviously the FTX capitulation crash, right? The volume is actually decreasing, but we still have, almost a quarter of the week to go. So we'll have to see how that volume ends up closing out. But this has been a major move. So it's going to be very interesting to see if we can hold the 2017 all-time high level as the low through here. But I think more likely the level that's going to get hit is somewhere around this 618 to 0.66 golden zone, in with, our daily low level down here from the daily lowest close in this range. I think that is probably more likely to be the level that we come down to. Now, if the stock market does have its major capitulation because CPI comes in hot, then, no holds bar on cryptocurrency. We can finally go down to maybe that 14K level, or even further down to the 11 to 10K level, which is basically through here. Now, I think this could be ending up being the magnet for price, because it is probably the best level in the entire chart if we do break down from here. So That's what I'm basically looking for at the moment, guys. 14K, 11,500. If we do get that major capitulation across all markets that gets triggered by CPI coming in too hot, and then FOMC, them having to come out, the dot plot gets marked up at FOMC into, the high fives, into the sixes, and they raise 50 basis points, then yeah, we're going to be looking at cryptocurrency potentially coming back down to retest this range low in the 16 to 17K range. And, even potentially if stocks break down to the COVID all-time highs or lower, because we do see, a Michael Burry, type event, and banks need to get bailed out, and there is some sort of a massive fear and panic liquidity crisis, final capitulation, then we will be looking for that 11,500 level. But that is the level I do want to buy. If we get down there, I'm 100% a massive buy, and I will just hold from there. Not even worry about managing positions, and just let it run for the rest of the cycle. Not going to be greedy. If we get down to those levels, 14, I'm a buyer, 11.5, I'm a buyer. Up in here, we'll be a buyer down back at 16K if we get there again. But other than that, it's just basically looking to see if this ends up coming down here. We put in some sort of larger accumulation type pattern through here, probably get some sort of a daily bullish divergence if this does hold, something like that, and then push again to the upside. Right, later in Q2, when we sort of hit that timing window for our CPI to start to come down, right? And then after that, we're going to have to deal with a whole heap of new other problems. If inflation does start to come down, usually it's coming down for a reason, right? And that kind of leads, and that reason is because the economy is struggling, right? And if we start to see earnings start to come down, and we start to see unemployment rate go up, then that could lead us to a whole new rollover, which that could be another capitulation event as well later on in the year. But we'll come to that when those problems start to arise. At the moment, the issue is inflation is still too hot, and if we come in with a hot reading on Tuesday, then we're going to be looking for much lower prices across all markets. I think there will be a panic selling type event which could get triggered on Tuesday. If not, I'm looking for a daily bullish divergence through here around 18,500 for some sort of a timing band low through here. And then we end up looking for some type of an inverse head and shoulders type setup here. And the breakout of that confirmation will be 25K. And if that happens, then that'll be probably the bottom of the bear market for cryptos. And we'll move across into reaccumulation. And the targets for a reaccumulation push will be 30K, 48K, and then go sideways for a year. Okay, thanks a lot, guys, for tuning. We'll see you all in the next episode.